Hello guys, welcome to this video, and in this video guys I'm going to cover four major mistakes that everybody is going to do on their trading. Okay, I mean this is a common mistake and I have paid a lot of money for these mistakes. I mean, yeah, if you are making some mistakes you should pay for that. And I learned these lessons by losing money exactly on trading. So by doing these big mistakes, I have lost a lot of money on trading at the initial stage of my trading. And so after that I just decided to actually check out and journal my trades and find out the mistakes that I do, and I could mark out them, and finally I could just read that, write that as a bulletin, and I'm just gonna cover and tell you guys to actually avoid these mistakes, and it will actually save you a lot of money because it helps you really well. And the first thing, first mistake, you guys, many of you often start the trading after taking a break or after having a losing streak. You should be like, that's something you must do. You should do. You should take a break, a small break from trading if you are getting a losing streak. The other case where you take some off from market is going to be some family functions or some vacations or any other things which you have to do. You should take some off from the market, and while you take a day off from the market, what you would be missing is the actual moves which happen on the market and the current trend and current scenarios. You will be aware of all these things because you were off from the market for a couple of days or weeks or months, even years. Some in the case of some people, I mean, they should be actually getting the idea of macro market principles before they going in that stage where they are not even connected to the market for years, and that's a big thing. If they are not having that macro market perspective, then it's a mistake. So first of all, I mean, the first thing is trading in a charter asset. That's the first mistake that many people do. So if you are going to start trading from tomorrow, the first thing you should be doing is you should start charting from the beginning. It should be like, I'm just gonna show you guys how to chart a certain asset within like a 10 minute. You only need to be like a 10 minute, to actually chart an asset. So the first thing which you need to make sure when you are going into the charting, you should be picking up. You should consider the thing. Um, the second thing too. I mean, trading an asset which you don't know how much about it. If you are not knowing much about an asset, like the volume, which is exactly trading on that asset, and the funding rates, that's really important because you should know. I mean, for an example, yesterday, GTC USDT perp was something which were ramping up really well yesterday, and if you are just looking our Binance, you could be like seeing this is the best pumper of yesterday. I mean, it was huge move right up. So if you are about to trade this asset, if you are about to make a short position, you could really see that there were really negative funding rate on this asset yesterday. And what does that mean is actually the shorts are paying for holding their shorts. So there should be many market makers. They just selling their spot holdings. Meanwhile, they are actually accumulating the longs positions over the perp side, and to actually aggregate and accumulate the funding fee, collect those funding fees that the shorts are paying to them. So it was 0.02% overall, and it's really huge amount of money if they are getting in and out with a huge amount of position. So that's why, yeah, 0.02% is huge. I mean, they could be like getting $100 or even $10 with a huge amount of position if they could open it. If they is having a huge bid ask spread, a distance widespread, then they would be like really actually ready to provide some liquidity, and meanwhile hedging those positions are already there, spot market or something, by going into the post only orders, which they don't have to pay any fees for making their orders. So they are not actually costing anything for creating in and outing certain positions, but they are getting actually fees or rebates for making some positions on their order types of called so-called post only order types. And this is what they are doing. I mean, you shouldn't be shorting it while meanwhile its funding rate is heavily negative. And the volume, that's the second thing which you should consider. Um, Usually, what we could observe from the market is the heavy pumper of or a heavy number of that specific day contains a lot of volume than the actual or its average volume, more than its actual average volume. So it's tradable in some case, but the volatility it actually provides could be abnormal in some cases. So you should be avoiding the trading there. So the better and the best thing is focusing on a specific pair rather than trading a bunch of pairs at some certain amount of time. You can trade those, you can trade. There is no problem with trading a bunch of assets, but the condition or the criteria or the requirement for to meet those trades is obviously it should be on a swing trade category. I mean, the stop losses which you have put on that trade should be wide enough to actually justify to yourself that it comes under a category of a swing trade. How could you find that? That's the question that you should be asking, right? You can find that some ways, like you should be like putting that indicator called ACR or ADR, average candle range. That's the full form of these indicators. And once you put this indicator called ACR, so why it's not loading? I'm not sure why it's not loading, but it's gonna in three indicators already, and this one also. But I like to just close this one because it's ACR. And so you have this one. If you have to just make sure that you are in a sync trade, positional sync trade, you should keep. You should have to keep. So I'm just gonna take this GTC USDT perp on this, and just gonna check out what is the actual monthly candle range. As I said, that says to $2 on this thing, $2.138. So yeah, I mean on an intraweek position, you should be keeping 0.090 stop loss. That says stop loss. Yes, here stop. It's a SER right now. So if you can take an entry from here, then what's the actual stop loss you need to pick up is 0. Yeah, I mean approximately this. Uh, that should be equal to. I mean, just gonna. Yeah, I mean nearly 0.90. I mean this exactly. On a minimum. I mean this is not. I'm not gonna say that you should put the stop loss like this. No, I never meant it. You should make sure you have at least a gap of this on a minimum basis. Uh, you should make sure that your stop loss is at least on a list this far away from your entry point, to be in a sync trade category if that trade comes under a sync trade category. And if you're not having this much, then it's not come under a sync trade category. I mean, this is 3.92 percentage. So it comes like you can be like going 20x leverage on that specific trade if you want to go on an isolated margin. If you're on a cross margin on that specific trade, you should be calculating that separately by using this position tracing tool that you can get from here. So that's the thing. Okay. All right. So the first thing is that I just covered that you should be looking that as a never go blindly on any specific trade, and then you should make sure that you have enough volume, and you should chart it. I mean, I will just look around and walk around you, all of you guys, on how to chart a specific asset within 20 minutes or 15 minutes or whatever time it takes. You just have to just sit and notice, and it's the best thing, or it's the best rules, or it's mandatory, or it's necessary to actually chart those assets before you just getting into trades. You can't be like, if you're a scalper, if you're looking to scalp those assets, then you should be only doing a specific assets rather than going into a bunch of assets. You can be like, if you're a crypto trader, you do have a lot of cryptos which is listed on a perp, and which is you're just able to trade that out of the perp margin, but on derivative section. But what's the problem with that is the volatility could be abnormal sometimes. You can just even scalp it, because there is, if there is only a few volume left out of the market, and then there you can see that huge manipulations of the market, and this they're just trying to actually getting you out from the market, from your positions, then it's obviously wrong for you. And going on a counter trade without any reason is the third thing that I have made this mistake a lot of time and lost money on trading. The first, the most people actually doing this thing is actually when they see this sort of an imbalance, and price just ranging after above it, they just be like, oh my god, it's just making this sort of a range, and I'm gonna short it. No, you never have to do that. So what's the condition? You should be like looking for short position. This is actually a time where you should be looking for short. But what if it's yesterday's condition? Yesterday's it was there was something like this. Would you wanna be shorting this thing? Never. Why? The biggest volume area is obviously here, and the price is just making some outlets above this value area high. And why should you be shorting this? Never. Once the price is accepting inside of the value, that's where you should be looking for the shorts and longs, in order to be, I mean, if it's getting acceptance inside of this value area low, then you should be longing. If it's accepting instead of the value area high, then you should be looking for shorting. And what is actually, I mean, how do you know it's actually that you're getting the acceptance or the rejections from market? It's very easy to actually find out. You just expand this volume profile, and if you could just find out the volume is just the biggest volume point is just above this value area high, and if the price is creating a clause below of this value, the previous value area high, or it just have became an HVN top or HVN bottom. I mean, this is an HVN bottom. I mean, HVN means this is actually an HVN bottom. What does that actually mean? HVN bottom means it's just the high volume, not bottom, and it's certain volume area, and you can see this a vacuum. There is a low volume node, and the price will easily pass through there once it gets into that area. I mean, the common question that you would be like asking to me, the prices came into this but never moved very quickly, because that was a fake out. And how could you distinguish between the fake outs and the real breakouts? Is just you just be focusing on the flag limits. And what is actually the flag limits is here. The flag limit is this point where the price actually made a pause, created a pause. Price paused it on this level because it's just got some liquidity from this point, and there could be those flag limits. The price just to just hold the price along these levels, in order to create multiple liquidity pools. So prices got into this and put back again. So if you guys are asking like, this is a good idea to actually create some shorts, I would say like, no. You should be also looking the funding rate. If the funding rate is negative, you never have to put any shorts. So the first thing, if I mean, when I should make a short, I mean, this is just a counter trend trade, a reversal trade. I mean, trading against some trend is really a risky task, but often you get a big risk reward ratio in this sort of specific trades. And the point where you should trigger your entry is once the prices break below this 2.172. I mean, candle plus could be really uh, I mean, it could be really helpful, but At least you should be looking for a 3-minute candle closure. So once you get that sort of a thing, you can be like going into the trigger, take it as a trigger for a short position, and just going into that counter trend trade. I mean, fading the trade. That's what we call in the trading language. Um, so that's the thing you should consider. And the fourth trade is taking trades which you don't know how to manage. Managing trades is really important. I will be talking about last of this session. I mean, now we are going to look how to chart a specific asset. I'm gonna just take the best pumper of today. That's the Harmony one, and I'm just gonna talk about how you can actually chart this. I have charted this already. I do have specific levels of this, but uh, it's not much. So I'm just gonna delete all of them. And what do I have is a clear chart. Okay. I do have the monthly levels, monthly pivots. Um, so you should be taking this replay tool. So it's a manual process. This is a resistance, this is a support. Price bouncer from here. And you never have to take the wicks, but you have to take the body of the candles. And the second thing which you have to do is spread it. You can see the price moving and the volume comes into the market. Okay, price comes down. Well, oh, here price just made a bounce from this point. Okay, now the resistance became this one. This area became the resistance. New resistance. That old previous support, I mean the resistance, um, which came into a resistance again at the same point. That's something which you should notice. We broke this support. We have below that monthly support right now. So the trend is definitely downtrend. So here the price just made a bounce and that's the support. It can be like active support. This level. Okay, this is another support. This is a resistance. Okay, this is we have it on the charting. So these all are monthly periods. It's gonna change its color into something else like solar monthly. So I'm gonna change its green. Okay, this should be this one. Fine. I'm gonna increase its size. I would say. Okay. I'll just lock it and hide it. The next process is taking the weekly chart. Same, doing the same or repeating the same process on this. Okay, here you got a resistance, right? I got a resistance, right? You can change its color, decrease the size, and actually changing the style of the line would be remarkable for you. Okay, it's pumping. Here you can be like find something called an order block, but the question is, it's a valid one? Not. I mean, it's not a valid one because the big how came below of it. I mean, the invalidation already match. So I mean, this was a weekly resistance. Let's go rejected again. Okay, here you can find the resistance again. That's a weekly one. Support. This is a weekly chart. You should mark it all. And like this, you should actually draw the daily one too. I mean, the process is already done. I mean, you have to delete this 11s, which comes this both very close. The weekly and monthly comes very closer. Then have to delete them all, and then fine. The chart is ready. Get a monthly and weekly levels. Should be like drawing the getting the daily levels too, and it's not that much harder. It's very easy and very quickly something which you can do. This is the daily level. Okay, this one and this one over here. So resistance of daily, and that's it. You only need to be getting the recent levels on the chart. And what the price is actually doing right now, it's just rejecting from the monthly level. That's what it is doing. So would you want to be like longing that? Not. It's taking the resist support here. It's taking the support here from this on this level, and it's just getting rejected from this resistance area. Then what should you? What do you want to do with this? Just sitting on your hand, and once it's recline above it, then here you can trigger it, and here you can put your stop loss. Here you can put your target, and that's a good trade. The price reclines. What if it's just getting back again and getting rejection below of this level? Then you can just make a short, set your stop loss here, and setting your target here. First target here and second target here could be a nice trade. And this is how you just derive your plans for what you have to do, and then the chart is already ready, and it's not completely ready. If it has to be completely ready chart, you should get the 4-hour order block market on your chart. This is the 4-hour order block, right? uh, it's not a valid one because the price just have made a big bill of it, but it can be like considered as an order block. Right. The next thing, should find out bearish order blocks too, and this is over here. That can be like easily taken out. Here there is have a QM pattern, and this is a nice area if it gets there, but liquidity has also been stacked up at these levels. So this QM pattern. So you should mark all these levels, and you can also just like drawing the volume profile and find out where the biggest volume in this or downtrend. The biggest volume on this downtrend was somewhere around slowing. Yeah, here price is just getting testing that level a lot of times, and most probably it's gonna break it. and price is gonna move upward. That's what my take is, because if it has to be like getting strongest rejection than this one, it already played out, and more probably it's gonna go up. And you should be marking these HVN nodes, HVN bottom, HVN tops, and it's something which you should do. Here is a volume based level. Price can be like React. You can just scalp those levels. The levels can be used for scalping volume based levels, and the daily, weekly, monthly based levels. And there is how the FVG is a fair value gaps, and these also can be used for trading the levels. So that's it. By the way, this is a prepared chart, and that's what you should have to trade. And the fourth one, I have explained that flag limit things and how do you manage your trades, and that's a big topic. So that I would be like, I would like to actually make another video about it. So what's actually market update? And that's the question that I often get asked by the people in my community channel. So here is a take on my take on the market. It's just rising words break down, and then it's um, about to break, about to just like creating another ledge over here, and price moving upward again. That's a thing. Yeah, I'm still looking upward because the open interest is really coming in. I mean, the longs are coming into the market because you can see the candles were really green and this too green. I mean, the last time the price open interest, I mean, almost 6K positions got opened in the market, and the price just went higher, and that means that the 6K longs came into the market, and it's just mean that the flow is in the order flow, just talking about the price is gonna go higher. They just are aiming for getting some huge liquidity in order to make some huge shorts, and the huge liquidity point in the market right now at this point is obviously that's a $32,000 level. This area, because many people who do the shorts at this point, um, they're just assuming that the price just gonna rally down, but the price only goes down once it gets its liquidity. That's really precious one. So that's all our conditions, and here I'm. Also, I would like to just talk about why I'm just making these videos and all these things. Okay. Okay. First of all, I mean, this is something which I would really love to talk about, and actually, this has been it's been like 3 years, nearly 3 years, which since I started the Telegram channel called Crypto World, and I've been uploading this market updates and sometimes the news which are related and relevant to the market, and yeah, I mean many educational posts and contents and all those things. So here we started the December of 2020, I mean that pandemic time, and so it's been a 3 year, almost nearly 3 year. I mean, I'm not saying it's just exactly the 3 year, but and also I've been in trading since 2017, and it's been a long time I've been in this industry working, and right now I mean, I'm not trading the crypto that much because I'm just focused on gold trading. I'm trading the gold really a lot of time. I mean, I've been into the gold since the last year. I got into the prop firms, proprietary firms. I mean, there should be some challenges or examinations that we should take. And if you're passing those challenges, then they will be like funding your accounts, and there should be some exam fees or challenge fees associated with that. So I just passed that, and I got my account got funded. So I'm just gonna show you guys all that. I mean, it's a good news that I really want to share with you. I mean, it's been a long time that I got that one of the prop firm account called TrueForex Fund in 2022, and I get the fund trading plus in 2022 last, and I messed up. I mean, I got that account funded, and I got the labor account 2022 last, and I just missed that at the beginning of the 2023, and I just re-attended the exam again and challenged it again, and I got a live account again and once again. So I'm gonna show you guys the last account which I got and all the proof and evidences. Here is the certificate which I got. I just mark this my name, to hide it. Here in this Discord channel of their FT Plus, they have posted that. So here, one of my comments that I got the first payout is available. You can check that out and its details. So here I got the two payments. Yeah, I mean nearly three payments I got. I got more money than I paid for the challenge account, and then I'm at a 10 percentage overall, and then I just lost the account again, and then that's what the status right now. I'm gonna just uh yeah, I mean that's the first time, and second time I just got refunded $25,000, and that live account is still with me. And I'm trading the gold on that right now. So many guys asked me about where you are trading the gold. I mean, I'm just gonna reply that all of you guys. I'm just got funded. I'm a funded trader right now. I'm a prop firm trader. So it's been my profession. It's a professional trading. I mean, it's really complicated if you are trading in a funded trading account. Then that's there is how complicated rules like you don't have to go like 5% drawdown within a day, and 10% overall drawdown level is there. You never have to cross those limits. If you are just going against those rules, and if you are crossing those drawdown limits, then your account will be banned. You will be banned. You'll get banned, and then your account will be just it's gone, and then there you don't have to you don't have any uses for that. So guys, that's okay. I'm just a from trader. I got a live account, funded account. Just show you that's all proofs and evidence, and okay, so it's yeah, I mean some trades just rendered. Yeah, what's happening? We used to do that comes down. Yeah, it's going up, right? There is no problem because it's the reason behind I just like this because there is have a lot of volume here. It's obviously that's the case, but it just seems like it's rejected here. But even though there stop loss for this trade should be here because that's the validation. Here there is have a lot of liquidity stacked up, and the long side would be really eager to actually take out this liquidity. That's what I said. Okay, so that's our updates, and that's something which I wanted to tell you guys. There's have a good chance, but this thing is gonna be the bottom when the liquidation hit. Many rounds came in, and it can be like this and a double bottom, creating a double bottom, moving up again. That's what I'm looking for exactly. That's it, guys. And here, my bootcamp project is again open. If you guys want to join, then you can join. And it comes with the cost of $50 right now. If you're interested, just let me know that. Okay, guys. Bye. Also, I would be like really interested to share with you guys all my strategies and stuffs in my bootcamp project. If you guys are interested, you can join that. So guys, bye.